Are you ready for a double-digit rally? David Zervos says the best is yet to come for stocks. Stay to the end as David breaks down why fears of stagflation and tariffs are overblown, and which sectors he thinks will lead the next leg higher.
I don't, Frank. I think we're well past that. I mean, everybody's been looking for a reason to get nervous, and every time they do, they regret it a week or a day or a month later. So I think we're in a very exciting place. We've had this administration have some pretty big wins in the last 5 to 10 days. Some of their biggest wins over the course of this administration since inauguration in January, and really since the election back in November. And the market's adjusting to that. The market likes what it sees on trade deals. The market likes what it sees on the Tax Cut and Jobs Act. The market likes what it sees on deregulation. And the market is telling you a little bit that the crosshairs are really kind of next getting set on the Federal Reserve, and that I think the next tailwind for markets is probably coming from more expectations about rate cuts into 2020.
Can I also go to what we're hearing from J.P. Morgan? They're telling us they see the market pulling back, the S&P going down about 6,000, about a 4% decline from here. What is your second half outlook specifically for the equity market?
I think it'll probably be a lot like the first half, but stronger in equities and maybe a little less strong in the rate side. The rate side did a lot of heavy lifting. We saw more rate cuts get priced into 2026, 2027, with a pretty significant move in the belly of the yield curve to the tune of about 70 basis points. I think we'll have a little less on the rate side. Maybe we can get 10 years down toward that 4% level and maybe through it by the end of the year. But I think equities are going to have a double-digit second half.
All right, you mentioned the Fed. We heard from Raphael Bostic this morning. He spoke to our European colleagues. I want to get your take on what he said about tariffs and the inflation impact.
The textbook story for economics is if you do tariffs, it's a one-time shift. It happens quickly. What we are seeing today, though, is not just a one-time shift. It's actually something that's being stretched out over a much longer period of time. I think that runs the risk that people start to feel like inflation is always with them. This elevated level of inflation is always with them. And that then runs the risk that there might be some structural changes that businesses and consumers, for that matter, make.
All right, so David, coming back to you, are you concerned at all about a potential stagflation situation, slower growth, higher inflations, and also maybe businesses pausing some activity due to tariff uncertainty?
I am not, Frank. I think that's actually wonderful news that the market is pricing some of that stagflation. I think positioning is absolutely terrible, particularly after April and May, and that a lot of people are going to have to get stopped back in to a much more Goldilocks outcome rather than the stagflation outcome. But I like that people out there in the market have got themselves twisted up, because that just means they have to climb the wall of worry back into the trades that we've been recommending at Jefferies. So I love Raphael. He's a very talented economist, but I think a lot of the folks at the Fed have gotten themselves, and around the FOMC table, have gotten themselves very twisted up on this tariff story, and they're reading textbooks. They're not reading markets. And the markets are telling you that people do not have significant changes in inflation expectations based on tariffs. Whether you look at the TIPS market or even start to look at some of the crazy survey data that went a little loopy for a while, it's all telling you that people think this is very temporary. And if it even has any impact at all.
So with that, give us the sectors you think leads us higher in the second half of the year.
Well, I'm not a big sector guy. I'm the macro guy, so I'll stick my risk parity style trades, but I do think financials have quite a lot of room to run, and I'm very optimistic on deal flow and just a sort of deregulatory story that starts to hit both the energy sectors and the financial sectors. I'm not sure that the energy dereg is going to be that great for the energy sector. I think that's more going to be a benefit for the consumer, but I think the financial side really has room to run, Frank. I think there's a story here with the SLR, what the Fed's doing. I think the administration is very keen on kind of wrestling some regulatory purview back into the administration's basically area. I think they really want to see, like you opened the show. They want to see a TikTok deal. They want to see deals. They want to see